globaleffectsclub.com, and we're here today to take a look at Chinese manufacturing PMI. I have the numbers that we're looking for up on the screen. Looking for 50.5, the previous was 50.4, and generally above 50 is expanding, the economy is getting better, and below 50 it's contracting. So we're looking for basically a neutral print right now. Slightly better than the middle of 50. Anything I would guess from 50.1 to 50.8 is not going to cause any sort of huge reaction. Having said that, of course, I may be totally wrong, but that would be my guess going into it. Anything sub 50 will certainly, I think, get a reaction, as it suggests an unexpected contraction, and anything better than 51 should also get a pretty decent reaction. So please take a moment to pause the record. Well, if you're watching the recording, pause the recording and read our risk disclaimer. If you are not watching the recording, just read our risk disclaimer, which should now be up on your screen. And then we will move to the charts and talk about some Aussie setups. Chinese data will affect pretty much all currencies because it's such a major player in the global marketplace. But Aussie is often the pair that feels the impact the most. One, because they're major trading partners. A lot of Australian exports go to China. A lot of raw materials out of Australia go to China. So they're very much tied. And then two, Aussie pairs just tend to be very risk sensitive in general. So any sort of risk, good or bad reaction is going to impact the Aussie. So that's why we are looking at mostly Aussie pairs. So we're going to start with Aussie Dollar. Here we have the 4-hour chart of Aussie Dollar. It's sort of, obviously, it's in a significant downtrend on the 4-hour chart. Starting in really the 22nd of February, or it was 22nd of January, so pretty much downhill. That's when we were trading at around almost 106 back in late January, and we're trading now around low 102s. If we more immediately, you can see the red is the 50 period EMA, green is 100, orange is 200. So we have a bearish configuration of the moving averages, still looking for shorts, but you want to be aware whenever after a significant downtrend, markets start to consolidate in this wedge-like pattern, that can be the beginning of at least a short-term reversal. If we can break above this upper trend line, I would expect to move back up towards 103.50 before eventually further downside. But you definitely don't want to get caught shorting a breakout above this trend line. The alternative, of course, if you're a little bit more willing to take on some risk, you could always try to buy it here at the bottom of this potential wedge, which comes in on the next candle right around 101.75. So you could look to try to fade any strong reaction. If we get a bad number, you could try to fade any strong reaction here for a move eventually, eventual breakout move, or at least a move back up to 102.40, the top side resistance. Euro Aussie, also a very clean setup. You can see here if we measure from the rally, from 123.50 basically up to the 131.90 recent highs, price spiked down to touch the 618% fib retracement perfectly, and then has moved higher from there. It only recently, 3 days ago now, spiked down to touch it. And it's right now sitting sort of right above the 50% fib. A breakout above this descending channel makes it kind of look like an ugly bear flag. And we also still have a potential inverse head and shoulders on the daily and weekly charts. This is the head, this is the right shoulder, which is still calling for above 140 for targets as long as we really hold this 127 area. So that's something to keep an eye on for Euro Aussie. If we get a strong negative Aussie reaction, we could see a breakout later tonight. Wait for a 4-hour close sort of above this trend line, and then it looks like a good possibility to try for some longs. Aussie Yen. Traded in this range as it sort of just went flat for a while, really starting in basically the start of the month until the 25th when we had that major sell-off. Aussie traded basically flat in a nice consistent range. It broke the range, tested the bottom of the range, and now is sitting there sort of waiting what to do. It's trading right around this 200 period EMA, again, 4-hour chart. As long as we remain below this range, obviously the risk is for another move lower. If we manage to break back up into this range on good numbers, you would look for another test of 97.50. Before then, Aussie will be faced with another decision whether or not to break out and continue higher or to go back to trading this range. Aussie Cad, double top here in retrospect, great setup, double top with RSI divergence, caused a great sell-off. It's possible that what we could be putting in here is kind of a slanted head and shoulders, left shoulder, head, right shoulder, the double top being the head. We would need to get below this, well, first these horizontal levels, basically between 105 and 104.90 and 105.10. But the major test will be clearing this trend line and then this 100 period EMA, which you can see price spike down the test perfectly before higher. That trend line is currently sitting right around 104.65 or so. A break below there should open up really a move back down to this 102.50 range bottom. Aussie Cad has not been a particularly great pair to trade lately. Lots of just really tight ranges and chop. But if it starts to accelerate to the downside, it could pose a nice longer-term setup. Aussie Kiwi, inverse head and shoulders pattern. We broke out, close to retesting the neckline, and if anything, it looks like we're sitting in a bull flag right now, waiting for a move up to higher prices. This is the measured move of that bull flag, takes us above 125, which incidentally is fairly close to the measured move of the inverse head and shoulders as well. So nice correlation, confluence up here of targets if we get up here to maybe try a short if we rally up there high enough. Support for Aussie Kiwi is here and then this trend line. Pound Kiwi I've talked about a few times lately. There's a video of it available on our Facebook page as well in our on our website under chart of the day, where I talk about the potential for an inverse head and shoulders setting up here. So far it's held the script beautifully for this inverse head and shoulders. It's chopping here, setting up a nice right shoulder. This 100 period EMA, again 4-hour chart, and this horizontal resistance serve as the neckline. A breakout above here. What's interesting about this is a breakout above there. The measured move, again, bottom of the neck to the neckline from the breakout, opens up really a larger breakout as it should put us above this long-term descending trend line and this 200 period moving average, which has sort of, you can see here, capped the move lately. It could be the signal of a major reversal for Pound Kiwi, which really, to me, if that does play out that way, and again, this is just a possibility, if it does play out that way, to me, that suggests very bad things for Kiwi, because I don't see, if you look at the pound dollar, I don't see a lot of potential for great long-term long moves on pound dollar, fundamentally or technically. So that would, if Pound Kiwi squeezing higher, it suggests it's that Kiwi dollar getting killed. So this is Kiwi dollar trading again. Nice resistance here up at this descending trend line, and nice support comes in actually at 82, where you get the third test of this bottom of the channel, and also that nice round number support. Could get a small bounce, but generally I am fairly bearish Kiwi. As you can see here, we came back really to test this neckline area almost perfectly before heading lower, which to me suggests that we should see a move back to around 81.50 before possibly higher, or at least some consolidation. But that is, we'll have to see what we get. Certainly 82 is support, and any moves back up towards 83.30 or so will be well met with resistance. All right, so we're right about at that time. I'm going to flip over to Aussie Dollar. Aussie Dollar selling off a little bit here. I have to find the number. $50.1. So if we click back, a little bit of a disappointment, but well within that range where I'm not expecting a particularly violent reaction longer term. Obviously, we got a bit of a sell-off here. We'll see if Aussie continues to sell off and for how long. Really wasn't. I mean, it's still. It's a 5-month low for the number, though, which is great. Still above that magic 50 line. I don't suspect this will be the spark to give us sustained Aussie weakness, but it's certainly not going to help the case. And there's a lot of Aussie setups, like we just ran through, that have some great potential for a good move down, especially Aussie Cad. Euro Aussie would move up, but that's down for the Aussie. Kiwi dollar, which will not be able to sustain much of a rally without Aussie sort of helping it out. And then pound Kiwi, which again up is for Aussie Kiwi. So this number, while not terrible, is certainly not going to help overnight risk bulls. Let's see if I'm going to write the actual number here. All right. So that was our number. We're gonna see. I'm actually really interested now in Aussie dollar. We had a bad number, but not a terrible number. If we could drop down to this 101.75 level, so about 30 pips lower, it might be worth taking a shorter term, like a shorter term scalp position long. Scalp position long. You would keep your stops right below this trend line. So let's say you would hypothetically get in around 101.8 or so. You would probably keep 101.70 stops, 60 stops, 20 pips or so, and then look for a 40 or 50 pip bounce higher before I suspect lower. Certainly, obviously, all Aussie resistances are now in play as well. Any sort of overnight rally to test the top of this trend line would open up a very nice short opportunity. Euro Aussie, keep an eye on this potential breakout. There's major moving average resistance here, just littered between market and where we need to get for a breakout, which really only would confirm a breakout if we got above all three of those. A 4-hour close above this trend line, so really a 4-hour close above this 100 period EMA, which is 128.70. Oh, thank you. Sorry, guys. I forget to change the tab. My bad. Thanks for the heads up. So, dollar, just so you can now see the chart that I was talking about. You guys, let me get that far with that. This is the top side resistance I'm talking about. This is the support area that you may consider a scalp position. Honestly, how I would trade if we got down here is try to keep like a 10 pip stop or 15 pip stop, and then just go to break even at 15 pips, and then just go to bed and ignore it. Get up in the morning and see what happened. I would suspect more times than not you'll get stopped out at break even, but we might rally up to this top side, and then you could put a target here or close it when you get up. That's probably what I would look to do, just to see if you get lucky and catch a runner higher. And if not, you take a break-even stop out and you move on. Euro Aussie again. So here's the chart for Euro Aussie. I don't want to short Euro Aussie. This is really good resistance right here at 128.60, and could be a very nice short. I don't want to. I want this pair It's because I have a bias. I want this pair to break out long, and I'll show you why. If we pop out to the daily chart, get rid of some of my chart art here. So the reason that I want it to break out, and I think that there's a good chance it'll break out, is because it just looks like we completed a neckline retest. If you zoom in, look at like how unconvincing. We had this great spike down below the neckline, but we couldn't close it. Then the very next day, we had another spike down below the neckline and couldn't close it again. We moved higher. We reclaimed this 50-period EMA, and now we're trying to work a little bit higher. So that's why I would rather just wait for a breakout on the 4-hour chart and get long, because I think that's the way that the market's moving, and I want the weight. I want that weight behind me. Again, if you are biased in the opposite direction, either you're bearish the euro or bullish risk in general, which would be a euro Aussie short, certainly then this is a terrific level to short. This 128 or so, which is the 100 EMA and the top of this trend line. Great short potential, just not a setup that I'm interested in taking. Would rather wait for the long breakout. Aussie yen, really actually a great place to short like right now. The problem with yen pairs is that I keep having to expand my charts to remind myself of how big my stop would have to be. So right now we're trading at 94.50. You would need your stop at like 95.10, which is a big stop. The problem with they've been moving so much lately that this looks tiny to me, but it's actually like 60 pips. So you might want to keep your eye on Aussie yen. I'm going to drop it down to the hourly chart and show you a little bit cleaner. Actually, really just what a way to keep your stops tighter is look for an hourly break and close below this range bottom. You can see that this 50-hour EMA has sort of held up price. We're now below it. If we get an hourly close here, around 94.35 or so, you can just keep your stop above this pink line and look for a move back down to the 93 region, basically. But again, that really depends on how things look in 53 minutes. Aussie Cad. This is another one where, depending on your bias, you could trade it in either direction. Great support range here. Really, it's 105.10, 105.05 basically, down to 104.90, so a 20 pip support range. And then the next support level is 104.669, so 104.70. If you are bullish the Aussie or really bearish CAD, which has been a great thing to be of late, you would look to get long here, and if you get down, look to get long here. If you're bearish the Aussie, or you think that you want to get long some CAD because you think it's overbought, well, the CAD would be oversold because dollar CAD's overbought. I would wait for a 4-hour close below this 100 period EMA. We'll pop out to the daily chart, and I'll show you basically why this pair has been terrible for trading of late. Clear some of this chart art. All right, so we had a terrific rally in October of last year to November of last year, where we moved from 99 to 104, so just a great 500 pip run up. Then since then, we've gone nowhere, a pop higher, a pop lower, a pop higher, and now we don't know what's next. We're near that top of the range. Obviously, 102.50 basically is a great support area. This would be, I suspect, the reason I would be more hesitant to take it long is we're sitting right near this potential. If we jump out one more. So now we have a weekly chart, and now you can see a little bit why I'm hesitant to get overly long Aussie CAD. I mean, your upside, I mean, you have up until 107.50 before you get what's really, I think, all-time highs, or at least all-time recent highs. Doesn't give yourself a lot of upside. with this chop sort of higher, we're near the top of a resistance range. So I'd rather look for shorts, but certainly this last candle, very bullish weekly candle, little bit of consolidation now. We could see a move higher up to 107.50 before either reversal or the pair just continues to march higher. It really depends. Uh, it almost seems like now it depends on CAD more than Aussie, which is a bit of a switch in this pair. But CAD's been extraordinarily weak for about a month and a half now. Again, everything. No matter what risk does, CAD seems to stay weak. So, there's your Aussie CAD setup with something for either one. This 50-week EMA, you can see, has been just huge. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Couldn't close below it here. 12, 13. Basically 13 weeks it's held up the price. A trip back down to that level gives us basically 103.50. And a close below it, I think, is what's really going to start a sell-off on Aussie CAD if we're going to see one. Aussie Kiwi hasn't. It still looks like a bull flag. I still think we're going to see 125, and possibly then 125 is a good short. You can see some resistance back here, right aligns with 125. Pound Kiwi. Two ways to play Pound Kiwi. Take a long at a 4-hour close above this level right here, the 100 EMA and this neckline, and then get even longer on a break of this 200 and this trend line. Or if you're bolder and dip back down towards 1.822 or 1.8140, you could start getting some long down here for an eventual breakout. Or you could wait or you could short. If you're going to short, I would wait to short up here below 181.30. So either at 185 or below 181.30. I would be hesitant to short sort of up here because it's really a sneeze away from breaking some major stops and squeezing higher, which it might not do. But I think I'd rather short the squeeze than be short before it. Last but not least, Kiwi dollar still hasn't really gone anywhere. Watch basically this area right here, 82.24 for a double bottom potential, and then a move eventually higher if we can clear 83.25. So that's what I'm looking at in the market. Fairly disappointing reaction to the data, which I said as long as it stayed above 50, we weren't going to see a major anything. Slight sell-off in the Aussie. That slight sell-off is likely to continue probably until like 9, and then something else will interrupt it. Don't forget that we still have HSBC PMI data in about half an hour. The two usually track each other pretty well, so barring any major discrepancy, it's not likely to change any of the flows. But be aware of it. It may give us a another liquidity infusion where like it might pop Aussie down to the support area. If it's a bigger miss than the actual official data, I would be cautious about being long Aussie. So if HSBC is worse in about half an hour, I would be cautious about being long Aussie for at least the next 24 hours. If it's better, it's a wash. If it's the same, it's not going to change anything. So only if they're worse does it really change what you're looking for. So keep an eye on this Aussie yen. See if we can get a continued yen breakdown. In terms of fibs, just draw this real quick. You can see it just fell short of this 50% fib. Well, it actually touched it here, and then it stayed below it. So, you can easily see another equal move down in Aussie yen coming up. So that's all I got for you guys today. Are there any questions? I'll take a couple questions, and then we'll head out. Thanks, Robin. Hope it was useful. Good, glad to hear it. Hopefully, we'll get some volatility to end the week tomorrow. Remember again, tomorrow is March 1st, but there are not NFPs are not tomorrow. They are next week. But we will still have this sort of end of the month, end of the week flows going into tomorrow. So sort of just be aware of that. Thanks for coming, Richard. I appreciate it. Thanks, guys. Again, hopefully it was useful, and we'll be doing more of these in the future. So I hope to see all you guys, and then hopefully some more people as well. So I will talk to you guys later.